You know, there's talks about a possible World War III with Ukraine and Russia. And so I've been hit with the question, can you trade during a possible war? Or would you trade during a possible war? And how would it affect the markets across the world if this war were to happen? We're going to dive into that. And there's a saying that says the rich gets richer during a national crisis. And that's absolutely true because they understand something that a lot of us don't. We're going to deep dive into that a bit. We're going to look at some charts and how a crisis can affect the market by simply looking at news and looking at charts and how it correlates with one another. Let's deep dive into this. And I promise you guys, this will be a treat for you guys. Let's get into it. So can we all agree that we don't want a war? Well, typically the wealthy want a war because it makes them even richer, but that's sort of another topic. We'll touch on that a little bit. But overall, we don't want war. One, because there's a lot of potential casualties. But number two, it messes up the market, the local market, the stock market, the financial market, the housing market, and so much more. And even just talks about it can affect it. And if you've been trading this week, you will understand exactly what I mean when there was some fluctuations going on just because of news. And we're going to talk a little bit about how news affect the market and how you should trade, if you should trade. And we're going to find out exactly which currencies are affected, right? So number one, before we do that, we need to identify who is a part of the war. We know that it's Ukraine, we know that it's Russia, and if they get involved, then NATO is going to get involved. And NATO consists of many different countries, typically European countries, and it can definitely affect the euro. And let's break it to you how. It's kind of a trickle-down effect. So first we need to understand that Russia supplies a lot of Europeans oil. Russia can withhold the oil to these European nations, and that can cause the euro to rise. So think about it. If you are a trader, a long-term trader, and if you are investing in the euro, let's say you go long and you buy, and you hope that the euro buy against, let's say, the Japanese yen, and then a war breaks out or there's a potential war breaking out, then you know that number one, Russia is no longer going to supply the oil for European nations. Number two, it's going to cause the euro to rise or inflate the euro, which means it's going to drop the value. So if you're trading those two currencies, the euro will tank. Now, how far? That's something else we need to look at. But literally in minutes, that euro can tank eventually. So one, the reason why is because there's no more oil being supplied to Europe from Russia. And although these European countries have enough oil, it's not going to flow as frequently, which means they're going to have to rise the price of gas and oil for their production throughout the country. And if it rises, then that means their citizens are going to pay more, right? So ultimately, whenever you have something that is precious and it becomes dried up a bit, or it's not as frequently available as it used to be, it's going to be worth more. Just like anything that you think of, if there is a shortage on eggs, for example, then the egg price is going to go up to prevent a lot of people buying it. So that's how that works. Number two, because NATO may be involved, the United States is a part of NATO, which will affect the United States dollar and other currencies within the NATO organization. So because it's going to affect the United States dollar will drop. So let's think of it like this. If you're holding the United States dollar for buy against the Japanese yen, you know that there's going to be a lot of people who are going to be releasing that dollar. They're going to be getting out. They're going to be shorting. One, because they're losing money as price is going down. And the more people take money out, the faster it's going to dive down. So you can definitely invest. So you can see how it trickles down from Russia no longer supplying oil to these European countries. And then those who are long-term traders, specifically the banks and the hedge funds, those who put in billions and billions of dollars into the financial market for, let's say, a buy for the United States dollar, are going to start releasing those buys. They're going to start shorting and taking out their money out of the United States dollar because they don't want to lose money either. They want to invest in something that's going to be worth their while. That's how they make money. And then it's going to cause the market to drop. So if you're in on that ride, your funds are going to drop as well. And more likely, you're going to take your money out too because you don't want to lose more money. And it's going to cause further drops. So when you take your money out of a currency in bulks, like the banks do, then it's going to drive that market down. And we're talking about hundreds and hundreds of pips within a few minutes. So that can definitely affect it. So my answer to the first question is you can absolutely trade the market, but it is not for beginners. You want to understand news, you want to understand crisis, you want to understand what's going on within that crisis, who's involved with that crisis, and what currency is involved in that crisis. That's how you trade profitably within a crisis situation like a possible war. Let's go ahead and look at some other examples. And guys, I want you to stick with me to the end, because every time there's a crisis, there's one thing that shoots up in value that I will personally invest in if there's more talks about this war happening that I think you should. And it happens every single time during a crisis, even the past world wars. So stick with me. So really quickly, I'm going to show you a couple of websites that you can actually use for real-time news when you're trading stocks, cryptocurrency, foreign exchange, or anything of that nature, because looking at news from TV is not going to give you real-time news that's going to affect it right away. There's a lot of different things happening right now that your news doesn't show you until specific time. So the two websites I like to look at is dailyfx.com, where you can see your market news, trading strategies, market data, calendars, and so on and so forth. It'll provide you with the news ASAP, and also fxstreet.com, and it will provide you with all of the same stuff. If you're looking at your local news, it's not going to provide you with update information as soon as possible, because usually the local news will provide you with world data information at certain specific times unless it's an emergency broadcast. So you want to have one of these up or something else similar that's going to provide you with information as you're trading, so you don't miss a trade, or so that a trade doesn't go against you and it catches you off guard. So a good example of what I was talking about earlier is back in World War II, the stock market had tanked, but this one thing has shot up that a lot of people invested in, and we all know that history repeats itself. But let's look at a chart during the COVID-19 crisis and see how the markets reacted and which currency reacted in which way. So we're going to look at a couple pairs specifically to when the news of COVID-19 came out and when it was a big deal around the world. So we're going to look at a couple of currencies here. So we're currently on the Great Britain pound and the Swiss franc. We're on the monthly here. So we're looking at the month of March 2020 specifically, because that's when it was realized that, hey, we're in a pandemic. And although it was kind of creeping up in January and February of 2020, March is when it really happened. So let's look here on this pair, the monthly. This is all 1 month of data. And if you can look here at the bottom, it says March 2020. And look how long this wick is in particular. So this is what I want you guys to look at here. So look at this wick here. This is all price movement. This is people making decisions in the market to either let go or to buy. So we're on the Great Britain pound and the Swiss franc. And so this is what happened to the Great Britain pound. It started here at this top here, and it took a dive, and this is all in 1 month. So I'm going to get my measuring tool and grab it from the top of this wick all the way to the bottom of this long wick here. And that says about 1,288 pips in 1 month, in 30 days. So that is significant. That's huge. If you have $2 a pip, if you have $3 a pip, $10 a pip, whatever you're doing, if you're scalping and you're anticipating on only getting maybe 15 to 20 pips and you're in a buy, and then all of a sudden you see this tank within that month, then that's huge. You lost a lot of money, and more likely you're going to take your money out and run, and the banks are doing the same thing and it's dropping. And in result of dropping, this currency value is dropping as well because people are getting out of it. So that's what happened. Let's go ahead and look at another one. Like I said, we're specifically looking for March 2020, and we're at Great Britain pound and the Japanese yen. So here's March 2020. I'm going to get my measuring tool. Like I said, we're paying attention to these long wicks here. That means the market eventually tried to recover itself, but about 1,550 pips, give or take, within 30 days. And you have this long wick because it's trying to recover itself. No economy wants to naturally drop in value. So we have a system in the United States in which, although currency will drop, it tries to automatically recover itself in different ways. And that's another video that we can discuss another time. But look at that drop in just that 30-day month of time. And if I were to dissect it and go to like the 4 hour or the 1 hour, you would see how far it dropped just within that time frame, probably anywhere between 100 pips or so. And it's been fluctuating, getting in and getting out. So you never want to be caught in a trade during a middle of a crisis unless you know what's going on and what it's affecting. So we're in the Great Britain pound, and it definitely affected not only Britain and the United States, but all around the world, more some than others. So let's go to some United States pair. I'm just going to skip down, let's say USD/JPY, United States and the Japanese yen, specifically March, the United States dollar recovered pretty good within that month against the Japanese yen. But look at this long wick here, right here. Look how long that is. That's saying that price dropped that far within 30 days, but it recovered and it ended up closing right here. You know, so which is pretty good, but the result of a crisis happening just like that. So within March, there were tons of news going on. There were confirming we're in a pandemic. They weren't sure exactly what this crisis was. They didn't know too much about COVID-19. This is reaction of people scared, fear. It dropped the market down significantly. And I'm going to grab to see how many pips this is. So from the top to the bottom within 30 days, about 1,081 pips. So that's just an idea to let you know what happened. I'm pulled up the United States dollar and the Great Britain pound because those countries were involved in the COVID-19 announcements and things like that, just like a lot of other countries. But these are just some examples of me, one, knowing what country is involved in a crisis, and two, how it affects that country's currency, whether if it's going to go up or go down. So that's just an example of how you can trade a crisis, but you have to know the specifics. You have to be aware by looking at daily news and emergency news around the world, depending on what currency you're going to trade. Now, like I said in the middle of the video, I'm going to tell you what some things that we're going to invest in, and that's precious metals. So you can invest in gold or silver and things like that, because that is nature's money. That's been around since day one, and people have been trading and using that gold and precious metals for centuries on centuries at a time. And that's never going to die. That's never going to die. So when currencies may lose value, precious gold and metals are going to definitely gain value because people are fearful. They don't know what's going to happen with the man-made currency. Another thing that may skyrocket is Bitcoin. Because it's not a physical currency, people may be stocking on something that they can't hold. And so that may rise where people are investing a ton in different cryptocurrencies like Bitcoin. And although it may dip a bit during a possible war, I can assure you that it's going to rise and shoot up really, really high. And that could be one of the things that they are looking to do, because it seems like cryptocurrency is going to be the next world currency. So guys, that's the end of this video. I hope you guys gained something. We teach a ton of things like this in our Telegram. We give trade ideas for free, and we talk about certain things like this in our academy in the form in which we communicate with our students. We also provide live coaching and live trading, in which our students love a lot because they can actually trade with us. And so won't you guys come join us at bkforexacademy.com. Like and subscribe to this video. Don't forget to hit the notification bell. We'll definitely see you in the next video. Click on one of these videos at the bottom here after you finish this one. We'll see you in the next one.